Now, by now, it is no secret that virtually all assets in the market right now are experiencing some downside due to uncertainty in the macro sector. I mean, everything has been falling from tech to the major indexes to crypto and even gold. And typically, money would flow into gold due to uncertainty or a weakening dollar, where governments and major institutions continue to accumulate it as a hedge against inflation and reckless spending in the United States. But it seems no one even has an appetite for gold right now. And so obviously that's going to affect the crypto market, which is less liquid than gold or any of the indexes and is typically more volatile as well. That leads to major sell-offs in assets like XRP from a local high of 250 all the way back down to 214 as of recording this video. So that is not an easy loss to stomach at about 17%. And what's really got a lot of investors anxious or a bit pissed off is the fact that they were expecting a major pump or a rally into the end of the year, number one. And number two, they expected the ETF to provide some additional institutional support. But instead, all we saw on the day was downside, which is not a good indication of underlying strength in the market. Arguably, on a day like that, you should see some positive price action, and all we got was selling. So what's really going on? We've seen a few positive pieces of news, but at the end of the day, not even XRP or Bitcoin can fight the general trend or the tide of the market. So I'll be covering a bit of this negative news, then I'll dive into a bit of positive news so you can make your own decision, and I'll even cover the technicals. Now, the first thing is we are seeing a lot of weakness in the general market, and that is from a global standpoint, as right now the US is preparing $2,000 stimmy checks, which hopefully would support the market. But if anything, stimulus tends to create inflation, and when you have greater rates of inflation, that is going to push or force the Fed's hand to keep interest rates higher for longer. So there really is just a lose-lose situation here. And as you would expect, right, most households will blow through that right away, and it might make its way into the stock market like it did back in 2020, 2021, but I don't think this is going to solve any major problems. Then you have Japan preparing a $110 billion stimulus package, China approving a $1.4 trillion stimulus, the Fed likely ending QT on December 1st. And again, the only reason that they would start to practice QE or quantitative easing is because things are looking very negative from a macro backdrop. We have the US issuing another 1.9 trillion in treasuries, and the question is, who is going to pick those up in the current market environment? Canada is practicing QE. Global M2 hit a supply and a record of $137 trillion. And governments worldwide are continuing to cut rates. Over the last 2 years, we're seeing over 320 plus rate cuts. All of this is going to lead to greater inflation and a tougher environment for anyone to actually be able to afford anything. But it's important to know why this is occurring. This is likely occurring because they see the writing on the wall. Things are likely going to get worse before they get better. Now, speaking on rate cuts with the Fed, the odds of a no rate cut at the Fed's December 2025 meeting surged to 53% because markets are truly worried about inflation. And one thing I've noticed about Polymarket is it's a pretty good truth machine. At the end of the day, there's incentives for people to be right. They don't care about an opinion because their money is on the line. And so this is actually a good indicator that we're likely not going to get a rate cut in December if inflation continues to rise, which would be another negative thing for the markets. And just on the day, another $1 billion worth of levered crypto positions have been liquidated in 24 hours. Consistently, we're just hitting record after record after record. We've seen more leverage in this current market environment than we ever have before in crypto. And that is likely due to two factors. One, that we're a maturing market. And because we're a maturing market, the second factor would be that a lot of institutions have now entered and play bigger hands. So I expect this to become more normal in the future as the market grows and expands. But because we're seeing so much leverage and so many institutional players, this is also going to create a harder environment for the average retail investor to truly invest and play in crypto. Back in the day, it used to be easy, and now we're kind of living on hard mode.